Nils Andén, CEO, and Kortman, Interim CFO. 2024 is set to be quite a transformational year for Kindred. Nils, what would you say are the highlights of the first quarterly report we released today?
I think it was a very solid start to the year. As you said, it is a transformational year in many ways for us, but we're pleased with the performance in the first quarter. Our revenues came in at 307.7 million, which is a growth of 3% in constant currency. But I think more importantly, what we're most pleased about is the ongoing growth in our locally regulated markets, which is also our key focus as a business at the moment. We saw a all-time high, both in absolute numbers for our locally regulated market and also as a share of percentage of our gross winnings revenue. So it came in at 84%, which is a new all-time high. We're also really pleased, of course, with the ongoing cost reduction programs and that they're really paying dividends now, which meant that we also saw a 20% increase in our underlying EBITDA for the first quarter. So it came in just shy of 60 million and would actually have been over 60 million if you exclude North America. In terms of other key things, I think we're very pleased to see that the big strategic projects that we're doing are progressing according to plan. KSP has been rolled out, live in production, and we're going to onboard more customers now going forward. And also that our exit from North America is progressing according to plan, and we will be able to be operationally out by the end of Q2.
All in all, a solid start to 2024. You were appointed permanent CEO about 3 months ago. What do you view as your top priorities in your role going forward?
Yeah, it's a good question. And yes, I'm very happy, of course, to have become the permanent CEO. I think for me, 2024, we have a very clear strategy, which is really a building block for the future for Kindred as an organization. And the core focus is, of course, to continue to see market share gains and growth in our locally regulated markets and really accelerate that through excelling in really good customer experience across the board. But it's not only about growing, it's also how we grow. And that core focus is really a part of Kindred's DNA. It's around sustainable growth. It's ensuring that we have the right customers that play at levels that they're comfortable with. And if we're going to articulate that further, it's really about, I think, putting our customers first. Customer experience is really key in this industry. And that comes down to increased product focus and product differentiation across the board. And then when we look a little bit more internally, it's really around strengthening the culture, the very strong culture that Kindred has, but really continuing that work and enhance the engagement in the organization and the output from the organization through visible leadership, but also through a very clearly defined strategy. And then lastly, as we've seen the dividends from the cost control and the focus we have on ensuring that every penny counts, that this is something we want to continue. This is really something that is going to be a part of the Kindred DNA going forward and has been, but even more so, just ensuring that we have a very strict cost control in everything we do.
So focus on growth and cost control and culture. Yeah. All right, going back to the quarterly performance, Nils mentioned that the quarterly year-on-year growth in locally regulated markets was 5%, I think you mentioned. And Patrick, what markets and product segments was what I was tending to say are the main drivers behind this number of 5% locally regulated growth?
Yeah, we had of course, we discussed earlier, we had a very strong development in locally regulated markets overall, while we saw a decline of 16% in non-locally regulated markets. But if you pick out markets, we saw a very solid development in the Netherlands, growing by 24% in local currencies. We saw UK growing by 20% in local currencies, Romania by 17% in local currencies. So, of course, super development in those. That was again offset by weaker performance in countries like Sweden. We are addressing those issues at the moment. We discussed earlier today about the launch of the Otto Casino brand, which is one of the the mitigating actions that we're taking to tap into gaps that we have in the product offering overall. Casino saw a solid development overall year-over-year, whereas then we saw a little bit weaker development in the sports betting side of things. But even there, that's depending, of course, a lot about what kind of activity you have in the sports calendar, sports betting margins, etc. So now we have a very interesting summer coming up ahead of us here with the Euros, Olympics, and the likes.
Yeah. Yeah, so Sweden is one of the markets that are less performing less well at the moment. And as you mentioned, Otto Casino is launched in the market now as of mid-April. What can we expect in terms of a turnaround in this market over the year?
So I think we've seen some headwinds in Sweden, predominantly on the back of some of the stricter regulation, some of the duty of care changes that we implemented last year. And to be fair, it's also a very tough environment where we see a fairly high leakage to the unlicensed market in Sweden, which is, of course, really sad to see as a licensed operator. Our main objective is really to continue the strategy that we have had, but also to take learnings from the markets where we've really established a good footprint, a blueprint in terms of the strategy and operations like UK and Netherlands and Romania. The key focus is to continue the actives growth, which we were very pleased to see in Q1 already. We saw a 5% increase in actives in Sweden compared to the same period last year. And this is, I would say, the only real way that you can grow sustainably in a market like Sweden. And that will continue to be our focus. I think it's also fair to say that in Q1 in particular, Sweden was impacted by lower sports betting margins than what the group reported for Q1. So that has an impact. But we have a range of initiatives, but the key focus really is to continue the focus on actives growth. And I'm very excited to see what Otto Casino, our first pay and play brand in Sweden, can deliver for us.
Yeah, it will be interesting to follow. If we move from revenues further down the P&L, we can see that cost control measures are proven effective. And obviously the scale back in North America is one factor behind this improved profitability. But can you, Patrick, please add some more color on what is behind this improvement?
Yeah, it's a lot of hard work, really focus on every cost item in the P&L. We have seen a good improvement in the cost of sales element, where we've been able to reduce our cost of sales by 70 basis points on a year-over-year basis. We are reallocating marketing spend. So we had the reduction in overall marketing costs around 2 million. There, of course, a key driver of the reduced marketing spend is North America, where we have a reduction of 3 million approximately year over year. And then on the OPEX side, we have had headcount reductions, which we communicated already back in Q3 last year. That's starting now to be visible also in the P&L. And we are looking at all other OPEX elements as well as we speak and continuously. Year over year, we had approximately 7 million reduction in OPEX. Part of that is actually a fact that we had a boost in the OPEX in Q1 last year with non-recurring cost of 3 million. So it's a little bit too sharp drop, essentially. But I'm very pleased with how the cost program has turned out and the effects that we're seeing now in Q1.
Definitely. Nils, Q2 seemed to be off to a good start if we look at the trading update. Can you help us on how we should think about that if we move forward throughout the year?
Yeah, it was a very solid start to Q2 for sure. But I mean, as always, it's only 21 days that's included. And we did see a elevated sports betting margin for the first 21 days. Came in at 11.3%, which was actually the same as the full quarter in Q2 last year. But again, that is above our long-term average. So I think we don't read too much into it. I think it's pleasing to see that the activity is very strong and growing. And yeah, we have a positive outlook. It's a very interesting Q2. We have the start of the Euros at the end of the Q2, of course. But then holistically, I think it's going to be a very interesting summer as a whole. As Patrick mentioned, we have the Euros, we have the Olympics, we have Copa America. And we continue to focus on our strategic initiatives, ensuring that we exit North America, rolling more customers onto KSP to really test the bandwidth and get more volume, to get really tangible and good customer feedback, and of course driving a number of the growth initiatives that will support growth in our locally regulated markets for the rest of 2024.
So a summer of sports and, as you say, a transformational year ahead of us. Thank you both very much for your time.
Thank you.
Thank you.